Well, for more on what's happening on the markets, joining us now is Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, thanks so much for joining us today.
Thanks for having me.
You tweeted today that you're buying a lot of bonds right now.
That's true. I did buy some bonds today, yes.
So what has you doing that?
Well, you know, for the first time in sort of modern history, I've been in the investment business for 29 years. So when I started in the industry, rates were actually higher than they were today. But it's been since I was in my 20s since I've seen yields this good. And when you look at inflation and when you adjust for the what we call faulty shelter number that the Fed's using, inflation is actually negative on the year. So when you actually look at what's happening in a real rate of return perspective, if I buy a treasury, a guaranteed rate at 5% or above, and then inflation's at 3% and possibly lower, this is one of the best times people could buy bonds for a real rate of return that I've seen in my life.
You also were tweeting today, Ross, about Nvidia and Tesla being a thing together. Can you give us a bit of an insight into what you were talking about there?
Well, I've been a long-term investor in Nvidia and Tesla, and in my fund GK, they have popped into, you know, the 2 and 3 position in my fund behind MGM Resorts, and they're almost like cousins, because when Tesla was building autonomy, they were building it with Nvidia chips, and they got to a point where Tesla wanted to design their own chips that were really specific to Tesla's. And so Nvidia is now supplying chips to all the other autonomous car companies, and Tesla obviously makes their own. But as Nvidia and Tesla embark on AI applications, they really have this kinship in my mind that make them the 2 leading growth companies investors can own in my mind over the next, 5 to 10 years. So I kind of think they're a thing. They're like a couple, you know? Well,
we were just looking at a scorecard there of the 2 stocks over the past year, and Nvidia not really holding hands with Tesla there, taking off without it.
5 years. Look over 5 years.
Look over 5
I think
years.
It's a little more fair. You know, I hate when people just look like on short term for investing, because it really doesn't tell a real story for stocks like Tesla, who over the last 5 years has gone up, a tremendous amount, and it's pulled back over the last 12 months. But,
Okay, well, we got the 5 years up there, too. So
okay.
we got to look at it, Ross. And you're right. They're trending in the same direction there together over the 5-year. When you're thinking about Nvidia, we are looking forward to those results out tomorrow. How influential do you think Nvidia's results could end up being on broader markets? Because it did seem to incite enthusiasm at the end of its last quarter with its previous results.
Yeah, Nvidia has kind of in a way taken a little bit of the zeitgeist away from Tesla as being sort of the stock everybody's talking about. Even though everybody still does talk about Tesla, Elon with X has sort of distracted people from the Tesla story a little bit. But with Nvidia, you don't have that story at all. And so everybody's really focused on this as really the leader driving this AI revolution. I caution investors because enthusiasm has gotten so much so that maybe their expectations that are just too high. But on the other side of the coin, I think in real life for investors, Nvidia and Tesla are not cheap stocks. They're fully valued in a very high interest rate environment nonetheless. So I do think that there's risk for the stock, but for the company, I think they're in just the driver's seat for being the cells that will make the brains of the AI computing systems of the future. So I think for long-term investors, I wouldn't worry too much about what the stock does over earnings, but I expect a very good earnings report.
Okay, well, we'll be watching out for that, Ross, of course. We've also been watching U.S. home sales data, that new data point this morning showing that sales declined. The home builders, though, so that's existing home sales, new home sales seem to be the area of opportunity right now when it comes to those involved, the home builders in particular. And I understand you've got your eyes on Lennar.
Yeah, Lennar is also a holding at my firm and in my fund GK, and it has been for a little bit. And we're really bullish on new homes because what's happened in America is the Fed has created this really weird imbalance where most homeowners have loans at 3% and the new mortgages are at 7%. So nobody wants to sell their home. They're almost like stuck in their homes. And U.S. home affordability is the worst that I've ever seen it because home prices actually haven't gone down because there's no supply. So it's a really weird and imbalanced situation in the United States that's created a massive opportunity for home builders. Because if you take a new piece of land and build a new home on this piece of land, you're able to sell this no problem at a nice premium. And now with costs of labor and supplies coming back down from a year ago, there's more margin for home builders as well. So we're very, very bullish on home builders. Also with the work from home craze, remember it's work from home, so it's not work from apartment. So I think the lure of living in an apartment is less so when more and more people are spending their time working from home, and that makes the home sort of the primary piece of real estate in people's lives. So new home construction is going to be a great source of profits over the future.
Yeah, it does seem interesting, though, still to me in terms of people buying those new homes. I mean, most of them still needing to get a mortgage for them. So you would, wonder just how much they could afford for those new homes. Do you think that's a pressure on these home builders to put out houses that might come in a little bit lower than they would perhaps want, or is the demand just so high for those new homes that they can, do what it takes in order to build them at, whatever cost?
Yeah, so the home builders have this advantage of, like most people, including myself, are remodeling our homes because that's what's just happening, as you saw with the Lowe's report. And so like the premium people are willing to pay for a new home that they don't have to remodel, because a lot of the existing home sales are basically like tear downs and then people are forced to remodel them. So if you are selling a new home right now, you're getting a nice premium, and that's the advantages the home builders have. A lot of home inventory, like in Los Angeles, is quite old actually. And so new homes are really in demand. So home builders have that unique premium they're able to get despite higher rates. Now, we've seen rates move up 50 basis points on mortgages in the last month, so we haven't really seen how that's affect buyers. But inside my firm, we are seeing a lot of clients buying real estate right now, buying primary residences, and they're doing it. So people are using more cash than normal, and they're just paying higher interest rates, hoping to refinance in the next couple of years.